Bitcoin crypto morning tea. Hey. Good morning, everybody. It's September 19th, 2022. My name's pianomattyb. That is Scaramucci's. This is your morning TA. A brief glimpse into the crypto markets where the sun's shining, where the wind's blowing. All the humble opinion of this piano. Zamboni, bring in the data. The FOMO index has dropped to 21 from yesterday's 27. Bitcoin dominance is 39.2%. 24-hour volume is 80 billion. And the overall market cap is 899 billion. Give or take 100 million. Well, we talked about this, so it should have come as no surprise. Anyone in this boutique community when Bitcoin price action took a dive. Corroborating upside targets are 20.2, which is also the 20 moving average. But keep your papers on the support level of, you guessed it, 19.4. Because breaking that, the next stop would be 18.4. Oh, why you gots to. Lord love a duck if she didn't do just that. After a heartbreakingly optimistic rally, peaking out at 20.2, price action reversed and headed straight for our support line, 19.4. Making financial mincemeat out of her, she kept going, finding a bottom at 18.2 and has since grabbed the safety rope at time of production, 18.4. There are some bullish signals, but we'll get to that on the ding dong. For now, there's still $1,000 more to give back. If, and I say if the old bear flag plays out to its full 17.3 price probability. Skoo-doo-ya-doo-doo-doo. Now over on the ding dong, aka the daily chart. After falling through our channel support line at 19.4, we've continued down, sacrificing all wicks in its path, save for
that which once wicked will get candlestick.
Ah, yes, the angelic voices of the children's choir of enchanted wicks, letting us know that there are only 2 more sacrificial wicks to candlestick to the gods of wickedness down at, that's right, 17.3. More importantly, and I say if this happens, we'll be well into the execution of old Mr. Clean's head and shoulder pattern neckline, which could see 13K-ish come into play. But pianomattyb, I thought you said there are some bullish signals as well. And there are, and thanks for asking. We have bullish divergence of the reversal kind on both the MACD and the RSIs. Price action has made lower lows while both indicators have made higher lows. This tells us we may see a reversal and is basically the only thing that may postpone the head and shoulders pattern play out. Now over on the Wookie, aka the weekly chart, we painted in a dozy of a bearish engulfing candle. We've been droning on and on about last week ad nauseum, telling us that continued bearish pressure is on the horizon, and although longer time frames trump shorter time frames with signals, having the bullish divergence on the ding dong and the bearish engulfing candle on the weekly, it's a little bit of a technical analysis meat grinder that can only be reconciled by the fundamentals like, I don't know, maybe Jerry Powpow's FOMC meeting on Wednesday. Let's recap, shall we? The 4-hour chart has $1,000 more of give back to fulfill the bear flag. 17.3. The ding dong has 2 more sacrificial wicks down at 17.3, which would also breach Mr. Clean's neckline. That could end up at 13K-ish. Alas, There's a double whammy bullish divergence kicker on both the MACD and the RSI that could postpone said 13K-ish target. And the Wookiee printed out a doozy of a bearish engulfing candle close, signaling continued bearish pressure, while contradicting the ding-dong's bullish divergence, which might be reconciled on Wednesday after the FOMC meeting, which, if you didn't see last week's video, is an acronym for the real power behind the curtain. So remember, we're playing the same game as our psychopathic elected lead. That's right, it's the long game. So zoom out and have a fantastic day. And sing it with me now. Or on the banks of boom to spank, Bitcoin, crypto, morning tea. Hey, whoa. Ching. Make sure you like and subscribe and share this video.